I very much believe in learning by doing. So I tend to write papers that I don't know much about from the beginning, but in the end, it turned out quite well. So finance and financial inclusion is being one of them. So this paper is with a number of graduate students from the African School of Economics. It's an ongoing project on financial inclusion, and we just have a baseline. The experiment is ongoing. So I'm just going to talk about the project, talk about the design, and then tell you more about where we are and what we should expect. So, financial inclusion are low in Africa, and this is well documented. In Benin in particular, only 44% of adults use formal financial services, and 38% have accounts. And so if you consider access to credit and loan, this is, in fact, much lower. So there is a large literature on the determinants of financial inclusion, or financial exclusion, if you will. One is limited information, So in the data set that we use, only 48% of people claim to have any information at all about banking services. And as a result, there is a large, ongoing kind of studies trying to look at the effect, experimentally the effect of providing information about financial services on financial inclusion. And geographic distance and transportation cost is a big issue. I mean, for instance, in the data set that we use, only 33% of the respondents know where the local banks are located. And what is also interesting is the self-exclusion by saving behavior. If you don't have any money, you don't even bother, going to the bank, because you assume that you go to the bank to save or to actually show off your saving, and not for anything else. So the focus of literature has been on distance and cost of accessing financial services. But now, clearly, information and proof of access is not enough, especially, for instance, if we consider access to credit, access to loan to be a key component of financial inclusion. Having a bank account, that's great. But then if the bank cannot come to the rescue when you need money to open a business or to send your kids to school, when you face some kind of financial hardships, then the value of financial inclusion is limited. But access to credit is conditional on saving behavior, because, for instance, people who save more logically will have better shot at getting a loan. And, for information sharing, credit report that my colleague had just said is an important component. But saving behavior can be induced by improved financial management. For instance, there is literature showing, at least, I'm going to talk about that in a second, among firms, that those who can show sound financial management skills and experience have better shot at getting loan, So the question then would be, can training in personal finance, when you can show off your skill in personal finance, for instance, or you make a commitment which can be demonstrated to sound personal financial management, can this improve your access to credit and therefore to financial inclusion? So, as I mentioned earlier, there is a big literature on, especially on small and medium-sized enterprises, showing how financial training financial management have big effect on firms' performance, innovation, and also access to loan. I think there is a very influential paper by Bloom and others in India showing this. And there is a recent work by McKinsey from the World Bank in Togo, where they provide financial management training to firms, small enterprises in Togo, and find that this has an important effect on performance and also on access to loan. And there are similar programs in Benin and so on. Now, what the research has not done enough is to extend this approach, to extend this idea to personal finance, and to do this experimentally as opposed to observationally. You know, I mean, for instance, can we try to design an experiment where exposure to financial training is random, and to see, for instance, whether this exposure has an effect on financial inclusion, particularly on access to loan. So there is one reason. I mean, one of my personal motivation for this is, I mean, I've done a lot of research on social mobility, and recently, you know, using longitudinal data dating back to 19th century, where I find that family networks play an important role for social mobility. You know, like, for instance, the uncle effect was massive. You know, like, for instance, when you find a very successful African, you know, most of the time he's the nephew of someone, not the son of a daughter of someone, you know. So, and for instance, when you compare neighbors to family members, for instance, not only you have this kind of big aspiration effect, being close to someone who is educated, who is well-placed, forget about connection. The aspiration effect that this brings is massive. But it also helps that your uncle pay the school fees, right? It also helps that, you know, I mean, like, for instance, I've collected some data and to measure income across, you know, and I find that when you measure income through, when you measure income directly through, you know, earnings monthly, and you measure income through assets, they have no comparison. You know, like, there are people clearly living way beyond their means, you know. Why? Because there is someone like Leonard and I who pay the school fees every time. So that's the positive aspect. And the idea that, you know, I mean, like, you know, nobody should believe that, you know, nobody leaves what is it called? $5 by day, whatever it is. No, $2. Okay, no, that's true. That's not true. But nobody who's living over $2. It's because, you know, and so on. I also done a recent paper, for instance, on food security and mobile. And what I find, for instance, places where I have mobile coverage, food security is much lower. It's a better predictor of food security than income. Because, you know, when you call the cousin, the uncle, and say, okay, I haven't had anything today, money is on his way, you know, on its way. You know, so we should not underestimate how massive family solidarity has been in reducing, controlling poverty, and also raising aspiration and social mobility in Africa, you know. So, you know, I can be talking about this until tomorrow. But then, if you look at the literature, there is too much focus on the negatives. You know, for instance, Balin have shown that, you know, people take loans to show that they don't have money to give to anyone. You know, I mean, if people take loans that are even like, you know, the rate is very high because they want to hide their economic status. So, or for instance, there is a literature showing how this family solidarity hampers entrepreneurship. You know, like you have to hire your family members, and the money that you can use to invest, you have to distribute. You know, but then I'm telling myself that, okay, we need to find a balance. You know, it cannot be, you know, people like me who benefit from the system, we tend to praise it. you know, and those who mostly, you know, based in Europe, who are very used to a redemption system, they try to show mostly the negative. So I think that, so my motivation for this is, is there a way you can try to help people get this balance? You know, instead by not saying, you know, like by making a rule, I don't pay for funeral. I can pay for schooling, you know, or for instance, you know, but besides that, is there a way you can actually get you know, more efficient ways? So I can give you quickly one example. So a friend of mine, when I went to Canada, I was a grad student, he asked me for a lot of money, you know, at his camp, because I'm in Canada, I must have a lot of them. I was still a great grad student, a graduate student. So he sent it, and what I did was I took a copy of everything I earned and a copy of all expenses that I have and send it to him and say, tell me what is left for me to help you. You know, I was very transparent. Most people don't even try that because you don't want anybody to know how much you are making, you know. But now I did something totally different because I didn't have anything. So to show, well, you know, that's what I have. Tell me what is left. So he never asked me anything again. So, but then, but another thing that I did, which was also quite interesting, is that, you know, a cousin of mine asked me for money, and I say, okay, all right, here is $2,000 for a car. You take a driver's license, you become a taxi driver, and you give me half of it over 3 years, and the car belongs to you. That's it. You know, so I think there are ways you can actually sustain the system and at the same time do it more efficiently. And another way you can do this, for instance, is through mobile. You know, for instance, what we want to do here is to sort of improve saving and self-efficacy by not only providing information on financial services to a randomly selected group of people, but also have a very simple application where we can just track how much they are spending. Well, because this is inspired by a friend of mine from Sierra Leone who told me when he was a lawyer in Sierra Leone that he gave money away so much that at one point he decided to keep track and say, I mean, come on, if this guy shows up, I do this. And he told me that at the end of the year, he gave out 30,000. You know, like, I mean, he could make many, many more people happier, improve their welfare by spending only half of that. Well, because much of the money is for nonsense, you know, not for something that people really need. So I was thinking that maybe financial tracking will give people a sense of how much they are spending and give a sense of where they are spending their money. And then as a result, they can be helpful and at the same time be able to save money. And more than that is that if the information about behavior induced by the technology is provided to the bank, then it gives, you know, it will get the bank to be more trusting and so on. And as a result, it can improve your chance of having and getting loan. So we did. We are running this experiment thanks to a grant from Victor and SOS. That so there are two components, and these are, you know, pictures from the training we are doing, and you know, financial education, and then the application look like this. It's very simple. It's like Mint. I don't know who used Mint here. It's an application in the US that gets you to connect with your bank account, and you have a sense of how much you are spending. If you are overspending on food, you are overspending on transportation, it's going to tell you. So we have a version of that, and amazingly, this app is put together by undergraduate students in Benin. You know, so these kids, I mean, not kids, those students, they know much more than we give them credit for. So it's very simple. So basically, you register, and then you set up your financial plan for the year. And for that, you can get a financial planner to help. And then you
always, every month, you put side by side how much you plan to spend and how much you are spending. You see what I mean? And they will tell you whether you are over on one dimension and under in another dimension. So, and then, and then that information, it's helpful to know that information, we can have some banks where they're going to, you're going to use that as an information. First of all, you'll have a direct effect in terms of maybe you can save more, but then by looking at the structure of your expenses and how responsible you are in matching your revenue to expenses and the structure of spending, that's an information, for instance, that we hope will be used by banks in making decisions about whether you can get a student loan or, and so on and so forth. So the application look like that. And it takes in consideration the typical kind of expenses that people make every day, and then revenue as well. So, so this is the design. So people have been randomized in two groups. One group have information plus budgeting apps training. The other one do not. And so, we first of all, we show that data. We are balanced on covariates between treatment and control group. So whether it's gender, education, employment status, age. And then on financial variable, we have bank account, saving, loans, and then the application for budgeting. People who have used those applications in the past. And so basically, the randomization works. And now I can show you some very basic correlation, using the baseline data collection. You can find, for instance, that surprisingly, I should say, gender is not correlated with bank account, with saving, with loan, and the use of the application. But more educated people have bank accounts and save more. Older people have bank accounts and are more likely to get loan. And unemployment variable here is coded, in a negative way, so is unemployed. So, so employed people are more likely to get loan and so on. So there are some kind of very basic kind of intuitive relationships that we have. So now what's happening now is that we've done the initial training, and then, so we have several groups across the country that are involved in the training every week, on a rolling basis. And then people come back, every month for the next 5 months to be able to get additional information, additional training, so that after 5 months they have a clear sense of how this works. And again, as I mentioned earlier, we are working with banks. And banks not only provide the information on financial services, but also we plan to actually partner with some banks that are going to include the use of kind of information from the users of this application in the loan application. So that's where we are now. After 5 months, we are going to have the midline, and then in a year, we are going to have the inline survey. So already, from the training that we had, we have a sense that people have already started changing behavior. So we are not systematically comparing treatment and control, but then there is a sense in which, clearly, treatments. The control hasn't changed, because they have not been involved in any kind of shock or any training. But then the treatment has been trained, and then you can see from one section to another that there is a serious behavioral change, not only in planning, but also in saving after week 4. So clearly there is a sense in which the treatment will have an effect. Now, there is a bigger picture here that I think it's important to note. The bigger picture is that this project is run by the Institute for Finance and Management of the African School of Economics, And basically, this is a project, but then it's clearly possible that this application can be commercialized. If it's commercialized, especially if, for instance, the banks start recommending this to their clients, this will provide much needed resources, self-generated resources to fund higher education through scholarships, additional projects, and so on. So this is, I was on a panel yesterday about higher education in Africa, and something like, I heard that, only besides South African universities and some couple of universities, there is no African universities among the top 1,000 or something, it's dismal. But then everything that people talk about, we don't have enough money, the government is not giving us anything. But then I was insisting that by developing entrepreneurial initiative on campus, combining projects that can be income generating and also be serious research, this will be a way to overcome this limitation. And also the fact that we have grad students being involved in designing these apps and working on this project, it's something that great for research experience, learning experience, and so on. So I think it's important that I'm very grateful that we are working on SOS on this. Now, what is the next step? Would be the inline service. We are going to check closely the effect on saving, and also the effect on loan, but also we can see, for instance, to what extent some of the yields of credit and loans access in Africa, sometimes that political, sometimes sociological, can be overcome by this. Because today many banks, they mostly use political connections. They use non-financial economic related variable to make those important decisions. So it become part of the culture that you can actually see how people spend their money, how responsible people have, how much self-efficacy people have. This could maybe generate a new culture of evaluating credit worthiness that, in fact, could have positive effect on access to credit and financial inclusion in general. Thank you. Yeah, questions? Yes.
I wouldn't really say it's a question, probably an observation.
Yeah.
I think I like the analysis you gave about the social structure,
Yeah.
about spendings and all of that.
Yeah.
It reminded me of a story of my former boss.
Yeah.
He told me that what he does is that at the beginning of every month,
Yeah.
anybody that wants to come, anybody that needs money from him,
Yeah.
if you don't come the first 3 days of a month, then you come back the following month. So I really understand the importance.
How you can overcome the social pressure.
Yeah.
Exactly.
So along the line, your presentation, so I was looking for a point where I was expecting some of kind of structure that would formalize, the social structure, of that structure where families give money, probably in the app.
Yeah.
You can have somewhere like, okay, I've given money to this person for this social reason, and this person is going to pay back, just to formalize that process and you track,
I see. So that's a good suggestion. Thank you. Yeah.
I'm really looking forward to your finding, and I can see it being a research program as opposed to a research project, because I'm sure you'll get. One question about education.
Yeah.
And to me, I see it as a different concept of education. It's not just because when I look at in Burundi, my own experience is that when I was growing up, I saw many successful business people who did not have even high school diplomas, but they were very, very successful, and they knew how to use money. But today I see people are educated, and are very reckless. I mean, they fail everything they try. So when you talk about education in terms of financial success, I don't know what kind of education it is about. The other is, which is related to this, is that I realized that, again, going back to my experience, people started with businesses with very, very small amounts. But they were disciplined, they save every penny they get, and they grow into the business. These days, when people come to me, I don't know about you, young people have not done anything in business. They want big money. And I'm sure they have no experience on how to use it. You give the money, you don't get it back. Last question is, when you talk about family solidarity, I see an asymmetry in the sense that, at least for me, I don't know whether you, Victor, and Isuf is the same. My sense is that everybody expects me to help them, but the people I help don't expect to help anybody. So it's a one-way street. I give money and I keep giving, but nobody.
So maybe So maybe I should jump quickly because I'm so. So I think I agree with everything you have said, and but I mean this is great because we need to. This is one of the innovations that we need to come up with as a way to balance. I come up with something a while back, and I said, okay, especially when you come back from the US, and Europe as well. So everybody shows up. So somebody came with an idea of writing, put a piece of paper, and if you just write down how much you want, and but then it's open. As a result, it's open. Right? So the first one will ask for a huge amount, and the rest, when they see actually how much everybody else is asking, will become more moderate. To a point where, in equilibrium, people are going to come and see how much everybody else has asked, and just say, okay, that's it, I'm stopping. Anyway. So, I mean, I think the culture of very opaque, non-transparent kind of information about how much you earn and this kind of stuff, it makes people have wild ideas about how much you are. Because, I mean, like, those of us, nobody asks us about, now it's like, the last high-tech iPhone, or even like the last version of Apple, that I cannot even afford myself, So, but I mean, there is a way, but I mean, okay, usually we caricature this, and we shouldn't, I mean, like, because this is important. Now, the point you made about helping others, it's important, but also, my wife and I were talking the other day, and I say, you too need help. I mean, it's not, the help that I need, the help I need is not money, it's attention. So, for instance, why some of them cannot call my son, once every 2 months and say, your dad is behave, something like that. I mean, if that's all I get back from them is the fact that the level of attention that I pay to their kids, they pay half of that to my own kids, this would be great, because, in Africa, what happens is that they expect you to take care of their kids, and they think that God will take care of your own kids. I mean, like, because they have money, they have everything, But in fact, I tell my brothers repeatedly that, problem with girls, problem with money, problem with that. I don't have time. In fact, when the uncle from the outside pay attention to these things, it gets the kids to know that the whole family cares. It's not that it's dad who cares. So we need to also find creative ways to get the reciprocity. Anyway, so we can be talking about this forever. But anyway, so that's it, right? Oh, we have 5 minutes. Okay, good. Okay. Yeah. Anyway, so no, but I mean, the suggestion you made about so one thing that I see is that we use those suggestions maybe to improve the apps, in terms of the different lines in the budget, like for instance, it could be transferred to uncle and brothers. Transfer is not just help to family members. You specify the type of help and to whom, so that you can have, I clearly, you cannot run into the same trouble as my friend who spent 30 years, $30,000 in 1 year. I told him, 30,000, you set up a farm in your community. Everybody have jobs. You don't even know. You have no idea. Anyway, so I think it's a, anyway, so we need to really use it to improve the different alliances and so on. Yeah.
Thanks so much.
It doesn't pay anything.
Yeah, I get remittances. I'm a young African. Just following along these lines, and the question of transparency. One of the things I found interesting is I'm on a WhatsApp group, as many of us are, and the only thing that they contribute to is funerals, as opposed to not contributing to funerals. But over time, one of the things that has been interesting is seeing the contribution come into an equilibrium. When we started, there was a huge variation in what people contributed. No, actually contributed. So there is no ask of specific. You just say, if your father or your mother died in that group, it's our old high school group. People are just asked to contribute. And over time, the variance between what people are contributing, it's almost now like there is a fixed amount that most people contribute. So that kind of transparency led to this. And what it's moved from also, what I've noticed is that we moved from fewer people contributing with a huge disparity to a lot more contributing with smaller disparity. And so there is part of this feedback. So I'm thinking also in terms of the app, just like kind of the tax programs we use outside here in the West, is if you put into the app actually what are the averages for the region someone is in, or people like them, they get that feedback as well, whether that might affect their own, if I'm a teacher and you find that other teachers are spending only this amount on this, do you start questioning how am I spending my money and whether that makes sense?
Great. Yeah, so other questions?
Is it possible to add in the whole application some information about whether people are receiving and also whether they are also givers?
Yes.
Are there people who are receivers and givers at the same time?
I see.
I need to know that somebody else is giving.
Yeah, exactly. No, that's so those are really, really important suggestions. Okay, so thank you very much. Thank you very much.